If you compare to the 2020 halving, it took 220 days to recover to pre-halving hash price levels. And right now we're 320 days somewhat in after the halving, and we're still not back to that pre-halving level.
Welcome back to the Compass Mining Podcast. My name is Jarrett, and today I'm joined by Nico Smid, who is the founder of Digital Mining Solutions. Nico has joined the pod in the past. I'm really glad to have him back. Nico, how you doing?
I'm very good. Thank you very much. I recently moved houses, so now settled in the new office. I work a lot from home, so happy that all the boxes are unpacked and we can enjoy the new house. So been doing good.
Great. New year, new house. Is this also, did you do a internal move in Buenos Aires?
Yeah, so we actually moved 8 minutes away from the previous house. So we stayed in the same area.
Nice. But yeah. I can imagine a house move in Buenos Aires, even if it is only 8 minutes away, can be a lot. When I lived there, my elevator was super small, and depending on what floor you're on, urban moves are completely different from suburban moves. And I don't know if you guys have a car. Anyways, that's a logistical nightmare, kind of like moving miners around the country.
It was 40 degrees Celsius during the moving day, so that was fun. But
that's right. You guys are in the summer. You guys are in the midst
of the summer. Yeah, it's just February is the hottest month, I would say, here in Argentina.
That's that. When I lived there, I was there for February, March, April, and May, and February was warm. Getting on the if you've ever been to Buenos Aires, getting on the subte in February is dark. Do they still not have AC on the metro there?
Actually, I have no clue. I hardly take the metro here, so I usually take the car.
Nice. That's much better. Yeah. So let's dive into some mining and Digital Mining Solutions. You guys put up a lot of great content, and I'm going to leave Digital Mining Solutions, LinkedIn, Twitter. I'll leave your Twitter, LinkedIn, all that information. One of the things that has recently popped up, and I think a framing for this episode is looking at the realities of the mining economics right now, because I don't think that they're anything that's exciting, but that's okay. We just need to be honest about it, and then, take the reality for what it is and iterate and innovate accordingly. And one of the articles that you recently put up on LinkedIn that I actually want to talk about first, because I think we can talk about any part of the mining economics, the hash rate, the hash price, but you recently posted about hash cost. And I wonder if you can dive into what that is, define that, and then also what it's looking like right now.
Yeah, so I just told you before the episode, I wasn't using hash cost that much. I didn't know that much about it. So usually I write about stuff that I would like to learn about as well. So what I found interesting is that hash cost is not uniform. But let's start by explaining what hash price is, because hash price has been a metric that's been very widely adopted. And hash price is the amount of dollars a miner can make per amount of computing power per day. And that's usually measured in petahashes, because miners look at their fleet of miners. So 1,000 terahashes makes up for 1 petahash. So if you have 5 S21s, you're already at 1 petahash. And that hash price has been an indicator or a metric that many miners look at. Currently, it's sitting around $51 per petahash per day. And it's made up, or it's being influenced by 4 factors. And that is the block subsidy, which is a known, right? 3.125 at current halving cycle. Then it's the transaction fees, which are not known, so they tend to fluctuate. And unfortunately, as of 2025, they've been very low. We can talk about that later. It's influenced by difficulty and then Bitcoin price. And so this hash price is a uniform metric that no miner has influence on. It's the market forces, let's say, that determine that hash price. So it's the amount of revenue a miner can expect per petahash per day. And as a response to this popular metric, hash cost was developed, whereby the costs are calculated also based on the computing power in petahashes per day. But I think the big difference is that on the hash cost side, miners do have an influence. And I dove a bit deeper into the hash cost also because I saw public miners reporting about hash cost, analysts talking about hash cost. But hash cost is calculated by multiplying the fleet efficiency by the operational cost in kilowatt hours and then times 24 hours because there's 24 hours in a day. But that operational expenditure side or element is very interesting because one could include a certain element of operational expenditures while another doesn't. And then you can already not compare these types of hash costs to each other, right? So what I've looked into is that there's different types of hash costs. One can be on the operational level, so you look at all the costs, all your operational costs, and you take that into consideration. Another is that you look at the fleet level, let's say. Then usually the miners, they look at electricity costs and costs associated directly to that fleet, maybe cooling costs or maintenance, repairs. And then a last one is on the equipment level, whereby usually only the electricity price is taken. And comparing the hash costs of different machines helps in determining which machine you should choose in order to optimize your return on investment.
So hash cost is a different way for us to figure out a fleet's efficiency. In as many terms,
economic efficiency, I would say. Normally, we look at the cost side from on a kilowatt hour basis, right? But hash price is based on the amount of computing power. So hash cost came to life or was developed in order to be able to compare the hash price, which is based on the amount of computing power, to a cost that's based on the amount of computing power.
Yeah, I think it's a really interesting metric, and I've started to see it pop up more. Obviously, I saw your article or your post, I should say, that you put up on LinkedIn, which I found to be informative. It has a really good visual there in the bottom, as you always do with Digital Mining Solutions. I will put that actual post down in this episode description. I just started to see it more. Are pubcos starting to use that more?
Yeah, a lot of analysts are using it to compare pubcos. So I think it's something that people use to benchmark companies.
Yeah, nice. And with the clients that you work with, how relevant is hash cost? I assume hash cost is relevant even down to like the MOQ of 1, right? But is there a certain amount of fleet you need to be able to start to consider your hash cost, or is that not the case?
No, it's not the case. It's just a simplification of looking at your profitability, let's say. So it's easy to take hash price and multiply the hash price by the amount of petahashes you have running, and then the hash cost is a metric that can help you use hash price in a simple way, let's say, without making complex calculations. So I think it has that use case, and that's why analysts like it. They can compare companies. I think, like you mentioned, clients of mine, like my clients usually are a bit bigger. They're not retail clients, so they usually are used to run more complicated models, let's say. So I think hash cost is maybe more for relevant for retail and for outside communication more than internal usage, let's say, or financial planning or whatever. I think for retail, it can be very easy also because the operational cost, if you're hosting, is your hosting fee. Maybe your repairs, but upfront you usually don't know what the repairs will be. But if after a year you have an idea of what your repair costs were, you could include that. But your operational cost for somebody that has purchased a buy and host deal, let's say, is the monthly bill they get for using that hosting service.
Yeah, so it's more of this will allow us to create apples to compare because now
Yeah.
we're using the same. Okay. Well, thank you for covering that. I know that you are an analytics king, if it's okay to call you that.
Thank you.
Can
You're the
you
first one
get
calling me a king. So being
Yeah,
Dutch,
well, sorry. Analytics
yeah,
guru, how about that?
yeah, guru, yeah.
I know the word king these days is a little touchy. Um, can you give us an overview right now of where things are? Last I checked the hash rate index by Luxor, it's about $50 of hash price. And this was even just last night. Brad and I were on Bitcoin Mining Tuesdays. I was looking at this, and the overall hash rate was around 817 exahash. Can you kind of give us an overview right now of where we are and where you think we're going?
Okay. Well, the second one is always guesstimating, I would say. But
Yes.
where we are, I think, 2025, not so much happened. Like if we started the year just above 800 exahashes, and right now we're also at that level. We saw like a spike to 856 exahashes, but then a drop in response to the drop in Bitcoin price. Hash rate also dropped to 750, but now we're back at 806, 805. So nothing much happened, and the same goes for difficulty, whereby over the last 2 years we saw an average of 3.1% month over month difficulty increase. Right now it's we're in the beginning of March, and we've seen a year to date increase of less than 1%. So in that, like, hash rate difficulty aspect, nothing much happens. Hash price is also still suppressed. It's currently around at $51 per petahash per day. Towards the end of last year, we came above the $60 per petahash per day, which I think is a much healthier price level. But we came tumbling down with Bitcoin price. But more than I think the level of hash price, it's the length of the period that we have suppressed margins is tough for many miners. If you compare to the 2020 halving, it took 220 days to recover to pre-halving hash price levels. Right now we're 320 days somewhat in after the halving, and we're still not back to that pre-halving level. And at the halving, we had a big spike because of high transaction fees. But just before the halving, we were around at $100 per petahash per day hash price. And in order to get back there, by the end of H2, we would need to be around $250 Bitcoin. Sorry, $200 Bitcoin. The end of the year will be at $250,000 Bitcoin.
Whoa, we have to be at $250,000 Bitcoin to get back to the same hash price, assuming hash rate and difficulty remain equal?
No, so that's assuming transaction fees stay low, below that 1%, and projecting the average difficulty increase over the last 2 years to the future. So if that difficulty increase is lower, then the price obviously needs to be lower, but this is a projection I've done at the beginning of the year. So at the end of this year, we would need to be around the $250,000 Bitcoin price to be at the $100 hash price, which is pre-halving levels. So it can be attainable, but it's also depending on how things go, is the way we get there.
Yeah, according to your models, what do you think the percentage is now? And I think, and I want to get into this after you answer this, but I do think things have changed as of, I don't know, January 20th.
Yeah, so it's hard to look at that crystal ball, but before we started the call, you mentioned maybe going into a recession. I think if we go into a recession, Bitcoin price might respond and go down together with other assets on the short term. But then if in the medium more longer term, central banks start responding by injecting money again, then Bitcoin might stand out as a hedge, right? So I think it remains to be seen how people respond if there's a recession coming, and how the markets will respond to that. But right now, like going into 2025, we've seen that transaction fees have been very low. The bigger part of February, we were below 1% of total block rewards. If these transaction fees don't improve, then miners will depend on Bitcoin price to see hash price improve. So we would need to see a surge in hash or in Bitcoin price in order to see improvement in hash price.
What do you think the odds are that we get to, taking into account what you said, the difficulty increasing, the hash rate increasing, what do you think the odds are that we get to a $200,000 to $250,000 Bitcoin by the end of the year? If also, as you just said, transaction fees remain below par, I want to say. If you had to guess, what do you think? Compass Mining makes Bitcoin mining accessible to everyone. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary services. Start mining in as little as 48 hours with our turnkey hardware online and mining directly to your Bitcoin wallet within 2 business days. Discover more at compassmining.io and see how we can power your success.
Yeah, so I don't like to guess, I have to say, and I usually project in a more pessimistic way or conservative way, because if then things go better, that it's always positive. Let's say you need to prepare for the worst in mining. But the model that I really like, it's called the 2-year moving average multiplier. So it has like a 2-year moving average, and then a moving average that's multiplied by 5. And usually you can see there if price drops below that 2-year moving average, Bitcoin is undervalued, so it's a good time to buy. If it hugs or surpasses that 5 times multiplier, then it's a good time to scale out or to maybe sell a part of your stack if you want to make if you want to benefit from the cyclical nature of Bitcoin, right? And right now, like the lower bound is around 53,000, and its upper bound is at 265, something like that. And we're somewhere in the middle, so we're in very much neutral territory. So I'm not worried. Like, I still think we're in a bull market. Sorry. Also, if you zoom out and you look at the price action from the beginning of the bull market, early 23 to now, you can see that there were 3 phases in where there was a big price appreciation. And after the first 2 big price appreciations, the Bitcoin price went sideways, both periods for around 30 weeks. And by sideways, I mean ranging in a range that can be quite big. So you see the choppiness price going up and down. But if you zoom out, you see it goes sideways before it makes another big move. And currently, we had about 12 weeks of this sideways price action. Going from the high of 109 all the way down to what did we touch? 80,000, a bit below 80,000. So I think if you zoom out, it's still normal Bitcoin behavior, let's say, even for this market cycle. And also the daily price is still above the 200 moving average, which is an important indicator, let's say. Like usually it's looks for support at the 200-day moving average and then bounces off, or if it breaks through and follows through, then it can become resistance, and then we go into it's more likely that we go to a bear. But right now, I don't have any. Looking at the indicators that I use, I don't have any worries that we're heading into a bear market. It seems like normal Bitcoin behavior.
Yeah, I don't think we are either, but sometimes it's tough. Normally in Bitcoin cycles, you have 3 or 4 30% drops. I just think we're in the midst of one of those. But I do want to build on what you touched upon that we talked about before we hopped on, which is like, in the event that we do go into a recession and we do go into a bear market, one thing I want to just say is that no one knows the future, right? Let's just hypothetically plan as if that were to happen. Aside from, and this I know is the silver bullet in Bitcoin mining, aside from getting cheaper energy, what are other things that Bitcoin miners can do to weather that storm? And I'm assuming that you're talking to your clients. Maybe you guys are talking about this. Maybe you're not talking about this, because the one thing I'm personally looking at is like, let's live in the world where we're going to go into a recession. This is something that people have been saying for more than a year, that just the macro is setting up. There's just too much debt out there. Warren Buffett has been taking cash for probably 12 months and just putting it on the sideline. And he's normally a pretty good indicator of things that could happen in the future. But there's two things that could happen. One is that Bitcoin does turn into the flight of safety, as Hilary Fink calls it. And then people actually, instead of going into gold and silver in a down market, maybe they actually put into Bitcoin. So while a lot of the stocks, equities, commodities, bonds go down, maybe Bitcoin stays where it is or rises above. But in the event that that doesn't happen, and maybe we go into a recession and other things go down, including Bitcoin, other than the silver bullet and taking away your easy out here, Nico, other than saying getting cheaper energy, what are other things that maybe you've talked about with your clients, or you would talk about with your clients if a client called up and says, "Hey, Nico, this looks like this looks like it may happen. Hash price is not going to be as competitive. Other than the electricity, which we already have a really cheap rate on, and we can't improve further. What are other things that you would say?"
Yeah, so the other easy out is to upgrade your fleet, right, to the latest and greatest machines that are most efficient. But it does require a capital injection. So if you have the capital and you have, let's say, machines that are a bit older, you could consider upgrading your fleet. So getting more efficient machines. Machine prices currently are good. Like it seems like they are around the bottom. Like they're relatively low still. So it's a good moment to buy machines still. Other things you could do is put your machines in low power mode. By putting them in low power mode, you can increase the efficiency and either increase your margins a bit while reducing your costs, so that's another one, like going into low power mode and optimizing the efficiency of your machines. A third one, maybe that's more for operators or bigger miners, is to diversify, right? So if you're self-mining, diversify into maybe hosting services. If you have a repair shop, offer these repair services to third parties. There's different ways to diversify, I would say. And by generating a fiat income stream that provides you more of a buffer to cover the cost when you're near breaking even on your mining revenue, let's say, and allows you to hold on the Bitcoin that you're mining instead of being forced to sell. So there's different options there. It really is a case by case, I would say.
Definitely a contextual thing, depending on everyone's fleet. But I think that you gave some really good alpha there, because I hadn't considered for some, depending upon the size of their operation, they could offer hosting. They could help out with some repairs. I like obviously going into the low power mode. I think that that's a pretty easy fix for people to start to dive into. We're almost in the end of, well, I want to say we're almost near the end of Q1, but we actually literally are. You had talked about going to Mining Disrupt. What are you, and now we're going to shift gears a little bit just because I'm curious, what are you most looking forward to at Mining Disrupt? I assume you're going to have partners there, you're going to have clients there, you'll have other friends there.
Yeah, I think like meeting the people, right? Like I'm here in Buenos Aires, so it is quite remote. I work a lot with people from the States. So heading over there and seeing people face to face is something I look forward to most.
What are you going to be speaking? I feel like you should be on a panel.
Yeah, well, I felt the same, but you have to be a sponsor in order to get on stage. I'll be speaking at Bitcoin Las Vegas. That got confirmed. Whether it will be in a panel or whether I get presentation time, that's to be determined. But I'll be speaking in Las Vegas, so that's another event I will join.
Yeah, that's great. I'm excited that you'll be there. I'll be there as well. Obviously, Compass will be at both of these events. Do you know the topic of what you'll be speaking about in Las Vegas? I know you don't know whether you're going to be on a panel or not, but do you have no idea that they're just bringing
They asked me
another mining guy in?
So it can vary. But last time I spoke at last year I spoke at Bitcoin Amsterdam, so that's the same organization, but then the conference in Europe in Amsterdam, and there I talk about how miners can stay profitable for the longer term, let's say, how they can stay afloat in these harsh environments. So it touches upon what we've talked about, like optimizing efficiency and diversifying the revenue. So
the last time you were on, we had talked about your 2024 wrap up. It was an 80-something page document. Can you now, we're months out from that, how was that received? What was the feedback? What are you going to fix for next year when you do the wrap up for 2025?
Yeah, so it was very well received, and it led into a very many meetings and potential leads for me personally. So I think it was a good success. Also, I got quite some coverage by different media outlets. So Cindy and I, that's Cindy Fang of Bitcoin Mining Stocks. We put our hearts and souls into this report and managed to publish a very high quality product. What I would do maybe different for next year is package it different. It was a very long report, so you said 80 plus pages, and that's not for everybody. So we were thinking of next to such a big report to maybe cut it into pieces and distribute it in different formats. So different readers can find the information they're looking for, let's say.
Yeah, I think that's smart. Not everyone likes 80 pages. I personally loved it because it was just like I was on my phone just scrolling and scrolling. I thought it was really well done. I actually don't know how you're going to get much less than 60 pages just because it's so information dense and there's so many different parts. And I know Cindy was focused on the pub codes, but I thought that was great. And it's great to know that it helped you guys both individually and kind of as a cohort as you guys put together documents. Are you going to have anything out the rest of the year, like a mid-year, a quarterly? I believe you guys have a newsletter, which we can point people to, but what
so
else are you guys planning?
I have a weekly newsletter, and then 1 week I go over the mining economics, so look at the market conditions, and then the other week I go into innovation trends in the space. So that's coming out every week. It's been coming out for over 160 weeks without missing one. So if you want consistent mining knowledge, I would say sign up to that newsletter. But it's very likely that we'll publish quarterly and mid-year reviews, maybe a bit less dense than the annual review. I've done in the past quarterly reviews in 21 charts, for example. So probably something like that will come out. And then the annual review for sure will publish another report.
Amazing. I want to make sure you get back to everything you got going on. There's a lot to do with mining these days. It feels like we didn't even get into mining heat reuse, which we could probably talk about for a while, but that I just feel like I see new products coming out, hardware is coming out, efficiency is going up. Last time you were on, you talked about how we may be seeing 1 petahash machine coming out by the end of the year. That was something you did talk about. But if you're watching on YouTube, please subscribe. Listening on a podcast platform, please subscribe. Make sure you're following Compass Mining on LinkedIn, X, and YouTube. And Nico, I'm going to leave all of your links below. Leave a link to your newsletter, to your website, to your X, to your LinkedIn. I'll leave the post that you did on hash costs, which we touched on in the beginning. Thank you for taking the time and hopping on here.
No, thank you very much for the invite. It was a pleasure again.